What is going on, investors? Hopefully, you guys are doing well out there. My name is Colin Tedards. Welcome back to the Bleeding Edge. And on today's show, I've got two questions that constantly get asked of me. In fact, I get asked these questions so much. If I got $1 for each time I was asked it, my kids would probably have a couple extra Lego sets laying down inside. And both questions actually relate to each other because both of them relate to investors overestimating risk without even balancing it off with the idea of reward. And that's all the stock market is. It's risk versus reward. And the first question that I get asked all the time, particularly over the last year, as we spent a lot of time talking about the semiconductor industry as it relates to AI, cloud computing, all those types of things. And it's how much should an investor be concerned about China invading Taiwan as it relates again to semiconductor stocks. So first thing we have to do though is take a broad step backwards and just look over the past 12 months. The SMH, which is a broadly diversified ETF as it relates to semiconductors, it's got NVIDIA in there, AMD, Intel, Broadcom, Qualcomm, TSM, all the semiconductor stocks in there. That ETF is up 70%, 70% over the past, not over the past 5 years, just over the past 12 months. The SMH ETF up 70%. You would have done very well, as many of our subscribers did, as we've been recommending that ETF a number of times this year, all the way back starting in July. Now, AMD, if you've taken single stock risk, AMD, also a favorite here of the channel, that is up 157% just over the past 12 months. Look at a 5-year chart, 10-year chart of AMD. It paints equally as glorious a story. Now, NVIDIA, the poster child of semiconductor stocks rising, shares of NVIDIA are up 254% over the past 12 months. In comparison, to give you some idea of how the broader markets have done, the S&P 500 is up just 24% over the past 12 months. So just think about that. Even if we sit here tomorrow or sometime this week, heaven forbid, nobody wants China to invade Taiwan, as it would launch almost assuredly World War III, which is probably the biggest deterrent of that event even happening. But let's just imagine that China does invade Taiwan. Well, even if the semiconductor index and AMD and NVIDIA took a large haircut, chances are over the past 12 months, they'd probably still be outperforming the S&P 500, okay? And it was easy to forecast these types of returns once you saw AI and Microsoft and Google and Amazon going in an arm race to develop AI technology. It was pretty easy to see that semiconductors were likely to take off. Now, one thing that I often talk about is the stock market is not where you place your bet or hedge against World War III breaking out. And why is that? Why is that? Because the truth is, bad things happen all the time. Okay, in my entire, I guess I'm 25 years into investing, there's been multiple recessions. There's been a pandemic. That was pretty bad. There was multiple terrorist attack, one that we can all think of right off the top of our head, that was incredibly tragic. There's been multiple wars, okay, some very serious, sometimes little country to country skirmishes, if you will. That has all happened just over the past 2 decades, okay? Every single time it's been a buying opportunity. Every recession, every pandemic, every terrorist attack, every war that has broken out, you could have bought stocks and you probably would be up quite a bit. Every single time it's a buying opportunity. Now, that doesn't mean we blindly ignore risk, blindly think bad things can't happen and take away some of our wealth, particularly as the older you get, in retirement, close to retirement, you're taking profits. You have stop losses in place, okay? Maybe instead of being overweight the semiconductor industry, you're just allocating a smaller position. But don't let the headlines on Fox News, CNN, the doom and gloom blogs out there that have been calling for an invasion for not just over the past 12 months. We're talking about years and years of this potentially happening. It has taken away your opportunity to make life-changing gains, particularly over the past 12 months, and really over the past decade in the semiconductor industry. Bad things happen in the stock market every single time it presents a buying opportunity. You have stop losses in place, and when stocks go on a big run, you take a couple of chips off the table and you reallocate into other areas. or maybe you go on a vacation, or you buy something nice for yourself, the grandkids, the children, the wife. That's all you have to do. Don't sit here and think you can predict when World War III is going to break out. If you can do that, you probably shouldn't be investing in stocks. You should maybe be running for president. Now, the next question that I constantly get asked is insider selling. I get emails all the time saying, hey, this company, their CEO just sold a bunch of shares, or this company, the CFO just sold a bunch of shares. That is the case almost all the time. If you look at Nvidia, one of the best performing stocks over the last year, again, up over 250%, their CEO, Jensen Huang, is the biggest pumper of that stock. In fact, in some cases, he makes Elon Musk look tame as it relates to pumping his stock and his company. Jensen Huang, what did he do over the past year? He sold a ton of Nvidia stock. And why does he do that? It's because that is how these executives are compensated. More often than not, executives have a quote, low base salary, certainly in the tax bracket they are in, even if they're making several $100,000, a lot of that is going to federal and state income taxes, depending on where they are. The other thing that you have to realize with a CEO is they live the CEO lifestyle. They probably have many houses, at least maybe one or two multi-million-dollar houses. Just the property taxes, particularly out here in California, other places where property taxes are relatively high, just the property taxes, even if you own those houses outright, can be enormous. They likely have a family, they have children, and those children are probably getting into expensive schools and have expensive habits. Maybe have to drive a nice car. Speaking of cars and boats and yachts, well, these CEOs look around and they see other CEOs living a pretty nice lifestyle. And in some cases, as it relates to executives, it's keeping up with the Joneses. I have never, ever looked to see if executives are selling stocks and then drawn conclusions. Now, one reason why you could draw conclusions if the CEO or the CFO or a lot of management is buying shares. If they're buying shares, that could be a great sign that something behind the scenes is about to materialize. But most of the time, these sales are planned. They're planned by accountants. They're planned by their tax attorneys. They're planned because these executives make a quote, small base salary, and the vast majority of their compensation is in the form of stock. They have to pay taxes on those transactions. And so they have to sell the stock to not only fund their lifestyle, to pay taxes, to pay for other expenses, just like you and I. So the thing to focus on, and this relates to the first question as well, instead of focusing on all this stuff, whether World War III is going to break out, whether this executive is buying and selling, you just need to focus on about three things in the stock market. Focus on revenue growth. Is the company growing revenues? Is there a path for the company to grow revenues this year, next year, and into the future? On top of that, can they grow their profits? Are profits materializing now? And will profits be there in a few years? Also, margin expansion through improving your product, outcompeting competitors. Can you make more per dollar of sales? So as that revenue growth happens, can you expand margins at the same time? You look at Nvidia over the past year, that's exactly what that company has done. They've grown their revenues, they've expanded their profits, and they've expanded their margin. And that is why shares of that company is up over 250%. It is far easier to focus on the things that actually drive a stock, revenue and profits, rather than is this executive selling to pay his taxes, to buy a new multi-million-dollar mansion or a Bentley, or is China going to invade Taiwan, as been predicted or theorized has been possible for the past 2 decades. Investing actually isn't all that complicated. The fact is, most investors take in too much information and they are paralyzed by that information. Just remember, bad things happen, recessions, wars, terrorist attacks, pandemics, and every time each one of those things have occurred, really over the entire history of the stock market, it's actually been a buying opportunity. So keep that in mind next time you're consuming a lot of doom and gloom content. Hopefully, you guys enjoyed today's video. Back later this week. Colin Tedards signing off.